Yeah, people see what they want to see. Let's see here. Well. Hey, how's it going? I got a lot I want to kind of get through. And it's going to be a big, big week for everybody. Yeah, we'll see. You're not going to love me tonight. So I'm going to try my best to curb expectations a little bit. This week may or may not be good. There's a few things that need to happen. And I'm not interested in like going through every little bit of everything that we could possibly go through. But I wanted to go through the chart that I kind of built and worked on for AMC. And there's not a one size fits all for this. So, yeah, anywho, basically, this is going to be a quick kind of outlook video, and then I'm going to maybe piddle with the charts a little bit more. I want to talk about this particular kind of setup, and then what I'm seeing with the overall setup on AMC, and then kind of a little bit of like micro to macro kind of stuff, and then why that's important. So you see here that I have like a comparison sort of set up, and there's a reason I'm doing that. And part of that is because when I stare at the charts, I've been talking about this kind of diagram for a while, this guy right here, and we've talked about this quite a bit actually on our channel, maybe too much. And I'll probably end up talking again about this tomorrow during the day. And this is kind of what I think the whole major setup is that we're basically coming back to a historic creek level here and seeing if we can find support. And it may seem a little bit silly to call it a creek when you feel like you've been like below it. But that's completely dependent on where you think the creek is, right? And some folks are going to draw things, in a certain way, and it's going to make it look a certain way. In general, I think the best way to do it this particular time is to just play it straight, draw it from on the weekly chart, draw it from like the end of 2017 through where the support was found when it broke out. The other way you can do it is, and you can see if in that particular case, in that particular setup, we're actually below it. We didn't actually break out of it. And not only are we below it, we're like just below it. So it's really, really, really close, but it's not quite out yet. And this pullback would be then kind of a retreat back underneath that prevailing creek. The other way to do it is to use, I wouldn't say they're ancillary, they're still important, but you can use some other ones to draw through it. And I've done this like quite a bit in different ways. And it's basically just confirming what I already know, which is that we're sort of in like this pinch point. When you go back and you look at the most simple structures here, you can tell that the M cross that we have right here is very significant. So like number one, we hit the top. This is like the previous bottom, right? So you hit the previous support and then you drag the price back down. And then this to me looks like a reaction over something. And I know that you're going to say, well, yeah, it's a reaction over that 430 level, which is true. It is. But it also happens to go up and hit some pretty major creeks of its own on that peak. And this is where my concern is the more I've been like looking at it, if you measure the upward angles, a lot of the targets that were met at that 1330 are pretty much like finished. There's another target that's more like 16 to 20, and that target area is specifically like 16. It's where the gap is roughly. It's like 1660 or something like that. that target area is very broad. So the reason that I'm saying it's broad is because I went through it this weekend and I looked at a couple different things. So first I started with like a very simple comparison. I'm going to try to like go through this part pretty fast and give you guys the bottom line. Because the bottom line is that you're basically like narrowing between two major creeks right now, and you need to make a decision. And it will make a decision. And that decision is coming up very, very soon, probably by the 21st. And no matter what happens, I'm pretty confident that by the 21st, we're going to be moving. The direction is more of the question, right? And there's a lot of ways to interpret this. A lot of people have already said, you know, hey, I think it looks like a big inverted head and shoulder. And I'm like, I don't particularly agree with that, and there's a number of reasons why. And even if it was an inverted head and shoulder, you'd have to break the neckline, just like the head and shoulder down. You'd have to break the neckline up. So it doesn't really matter, you know. And I think that that's part of it. But then another thing is, you know, we could use Wyckoff analysis and look at these tops, which I did this weekend as well. And you could look at the overall setup, and you can find like central supports. I did that as well this weekend. You can look at comparisons. And here's what I'm kind of getting at is that I feel like there's a really good chance. No, there's almost a perfectly reasonable, like definite chance that by the 21st or very, very shortly after, you're making some really significant moves. But I don't think that it's very clear. And unfortunately, the waters that get muddied by the institutional traders are essentially it's not possible to easily clean them up. And there's going to be folks that say, hey man, it's so simple. You just got to go back and you just got to hit 430. Hey man, you're overcomplicating it. Just pick one thing, go with it. If it stays over the hourly, then it's good. Or if this or that. Yes, there are trends that historically mean that we're in a bullish move. However, I could then easily say that historically, like these trends have often been places where we have formed distributions. So anytime we break these trends is not a clear indication that we are going to move to the upside. Like for example, like the hourly buy signal, that could be one thing you look at, just an example. And then you can go back and look at what happened in July of 2023. Did that seem very bullish to a lot of folks, including myself? Yeah. Did it jump over the creek here? Yes, it did. Did it advance in price? Yes, it did. Did it build some kind of a support, what looked like a support above the hourly? Yes, it did. And then it gapped down some bazillion percent and started the downside. Now you would say in response to that, well, that's true, Booksy. It's done different things at different times. Nobody can know. So therefore, we're all just kind of screwed, right? And you'd also probably say as a critique, well, that was because of the reverse split. That was because of a Judge Zern decision. There's nothing like that right here. Fair enough. But every time that we've broken down here, 1-2 times in these particular examples, you've had dilutions. And in both cases, they did set up beforehand in distributive ways. So if we're looking at the current range and determining whether or not this is distributive looking, if we come to the conclusion that, yeah, it kind of looks distributive, then it's totally reasonable to expect that there could be some kind of a major catalyst that could send you down. All right. Other folks have been pretty adamant. We're going to come back down to 3. We're going to come back down low to check this creek. Other people are saying, no, you can't possibly go forward until you go all the way back down. And the truth is that all of those are reasonable. We've seen all of those things happen at different times on AMC. We've seen it make advancements and then spill all the way back down some 80%, 85%, and then continue. We've seen it make advancements and spill back down, and kind of like our March example, start a distribution halfway and then drop even further, right? And then we've seen examples where, yeah, it's advanced, it finds support, and then it can have a big move and continue. And that's ultimately what we want here. So if I were going to boil it down to like the most simple, basic, 100% like this is it. Like here's what I really think, you know, blah, 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 blah. Of all this other crap you could talk about, where do we need to sort of make support? Well, I would look at really only two lines, and you guys are like, no way, it's not possible, boys. You can't do that. It's not in your nature. You can't possibly just look at two lines. It doesn't seem possible. Well, these are little pink squiggly lines. That's technically two, but maybe I would say three. I could boil it down to three for you. And I'm going to give you the three, and then I'm going to talk about everything else that's kind of being shown here and why I think it's important. And I'm going to give you some examples. But if you were going to, excuse me, boil it down to just like three marks, okay, line number one is 494. And you might look back and say, well, 494, why don't you just say 5? I don't know. It's not 5. It's 494. Don't know what else to tell you. You're like, Booksy, it's just 5. It's got to be 5. No, I don't know why it's not 5. It's just not. I've done it as detailed as I possibly can, and it's 494. Okay? So you want to call it 5? Fine. Call it 5. I'm going to call it 494 because that's the number I got. 494 is the previous top. It is the previous support region. But that's not really why I marked it off. I marked it off because the structure that we see is built around 494. What do you mean? Why do you say that? Well, when you go back and you do the examination, excuse me, that I've done, and I'll show you what I did. I'm not going to just tell you to trust me or whatever. 494 is the last place you find supply before the up thrust that starts moving back down. And ultimately, it becomes respected as like the central, we can call it like a central support within this structure, okay? Wait, it's not 430? Why isn't it 430? Well, 430 is a support. It's a historic support. It's very important. It goes actually back to this previous one. And not surprisingly, 432 acted as essentially, and that I put it as more of like a region here, but 432 acted as the central support in the range that was back near the February earnings report. And that's why we've been trying to test it, and that's why we tested it coming down, okay? And ultimately, I think a lot of people's indication is that, well, it's probably either 455 as a bottom or 430 as a bottom. Correct. Both of those are correct. They're good supports. There's nothing wrong with calling those supports. But the reason I'm going to tell you, and I'll talk about it again, but the reason I'm going to say this is because it's absolutely critical that we find support on top of 494. If we do not find support on top of 494, but instead come into it, excuse me, with a hooking mechanism, which I've kind of stressed this as sort of very important. But if we were to come down, for example, and we went for a spring action, and let's say we went really low here. We did the 430 like a lot of the TA people are saying we might do. And then we come back up. Under no circumstance can you stop underneath 494 and see that as a supply. If you see a distribution here underneath 494, it could even have an up thrust at the end. It will, I'm almost going to guarantee it, and I can't guarantee a lot of things in the market, but that particular price level is so important right now that if we were to find a distribution underneath it, even if it gaps above a little bit or something like that, or does something strange, it will crash. And I mean, it will crash. It will come down very, very fast, probably to at least 380, and then we'll see. Maybe at that point we get down to the low threes, but more than likely it's going to be a stronger continuation of the downside. The ideal situation here is almost nail biting for me, because the ideal situation, I said there were two lines, right? Well, the lower line here isn't actually as important as you might think. It looks like we're holding it, but I don't think that matters that much, okay? So if I were to pick two lines, I would say, well, look, that one might matter in the end, but the truth is that every single one of these setups, and I'll talk about it, every single one of these actually breaks that trend. And there's no situation where this isn't tested. So if you're just looking for that as like a litmus test of like, oh, well, if it breaks that, it's done. No, that's not really true. The problem here isn't that. If you notice, we are setting up basically more like a distribution right now. We're setting up on the line, on the test, at that intersection as if we're ready to drop below and hook back to the upside, right, and distribute across 494 instead of being high and dropping back down through that line in order to find 494 as support. So again, I know I said 2 lines, but I'm going to pick 3. If I had to pick 3 lines, okay, these are the 3 that I would pick. I would ignore the wick here because this wick is a distributive action. You're like, wait a minute, I thought you said that was like a phase B top. Well, it is a phase B top if it's an accumulation. That's not reassuring. Well, that's what happened back here. You did get a higher high after coming down and breaking the trend. It was basically a gigantic hooking action. This still maintained an accumulation across the hole. So it's not impossible that that's what that is. But locally, what is it? It's a distributive top. Like locally, that's what happened. And we all know it happened because then it dropped all the way back down through the range. But in the moment when it broke above that high, I said, okay, that's probably it. That's as much as we need to do. Maybe we'll get to that 570, but we really don't have to. All we had to do is kind of push and see if we can see a new high. All right. That line right there, it's not a wedge. You might say, yeah, it is. It's a wedge, dude. Yes, it is. Sorry. It is a wedge. But this is almost always like, if we come into the what I call like the cat ear, right? The second cat ear with a distributive top, it's either going to be a double fake, which then goes your way, or it's flat out distribution. The only thing I can tell you is like go back and look at pretty much every way these things break down, which you're not going to do. So you're going to have to just kind of say, okay, well, I don't know, Booksy. You're the one that looks at this crap all day. You tell me. I'll tell you this. Normally, if this is in a situation where it's accumulation, even if this were going to be like a phase B top, right? Normally, the second part of the ear sets up above the prevailing creek so that you basically end up with a nice solid phase B. We didn't do that. So either it was a fake out, and this happened Thursday into Friday, okay? We didn't cross it. We didn't hold it. So either it's a fake out, and we're going to do a quick spring or a double flush, or it's distribution, period. And I know you don't like me to say that, but I just got to say it. Because if in fact it does do what I think it's going to, well, I don't say I think it's going to do. If it does what it normally does during a distribution, there will be moments where it'll look really bullish again, especially on the end. So this is where things get kind of dicey. So normally what I would say is that this can't possibly be done. It's not big enough. It needs to have more room. Okay, isn't it possible, Booksy, that this is not done and it's going to push up really hard Monday and we do get that phase B top and you just look like an idiot and you're just like talking through your teeth here and nothing's really wrong and it's going to end up pushing all the way back up. It's going to hit 570. Yeah, it's not impossible. Because you have a cross, which means that technically it's still within there. It could still move either way, right? It could. And this could have been just kind of like a bear head fake, almost to fake out the shorts, thinking it was going to slide back down, and then they buy in short positions. We're just going to cover those on Monday, find a support, and then move on to 580 or something, and then come back down, and then you're basically just in a phase B. And this could last a lot longer, and then you could go into more or less like a true, this is where things get kind of crazy, right? You said, well, it has to be by then. Well, yeah, I still think it's going to be roughly by the 21st, and I'll get to that. You could still end up having like a markup at that time, all right? But you can't do, and I'm going to have to stress it again, what we really, really don't want it to do is we really don't want it to drop down. I know I said 450. I don't want to see it go below 450 again because this right here, I know it was like a 2-penny move, but this right here went lower. And after making that high, we came back down and we found a support, but it was slightly lower than that preliminary supply drop. And I cannot find a single example, and then maybe they're out there, but I can't seem to find a very good example where that ends well for us. Usually that's an early sign that there's something off. And then the high volume tops here also really were kind of concerning. So why are you flipping bearish? You said you were super bullish. Yep. And there's a reason that I'm still cautiously optimistic, and it's because the range hasn't really given up yet. And there's some things about this that are really positive. Like the fact that this upper range is trading almost exclusively above 494 is possibly a good thing. Usually in an accumulation, you trade higher for longer because there's more buying pressure and then you don't go down very long. So that's a positive. But you can't, normally you don't see that kind of a positive move. And I know I'm kind of dipping into Wyckoff here and you guys are like, you're losing your train of thought, man. Tell me those lines. Well, I gave you one of them, which is the 494. And I'm explaining the other two. All right. In a distribution, okay, you normally will trade longer on the bottoms. You can see it back here. The reason for that is like that there's not as much, like every time you push up, you're getting sold off. So you're not spending as long in the tops. So you get these high volume tops with really low, kind of slow, boring bottoms. And that's more typical of a distribution. So it looks like a really up and down range. You're kind of pumping back to the upside. In this case, we all know it was like a bear flag. But the idea of trading low longer might seem like an accumulation, but that's not actually true. When you go back and you look at the previous range, notice how it's got these lovely little bouncing shapes, almost like a bouncing ball, right? And you're spending a lot of time in the highs of the range, and anytime you drop low, it's getting bought back up. In fact, looking at the end here, you can almost exclusively see like just wicks, right? Before that final almost spring-like action. Just pressing, right? Those are your buy-ins. They're quiet. They're not huge volume. They're not pushing the range to try to break out just yet. They're just there buying in. They've got their levels set, so they're buying up from these prices, and they're allowing sellers to get excited about it possibly dumping every time, right? And then eventually they take it, and you can see how quiet the range is. Like there are bits and pieces of this that look pretty loud. But on the whole, like especially up until the very end, it's not exactly like super dramatic. When we look back at some previous ranges, especially now, we compare these two, you're like, what the? This is like ridiculously different in terms of like the size of the moves. Accumulation usually ends with a kind of whimper. So it's typically kind of like, oh, what are we doing, at the end? And all of a sudden you just go, right? Where distribution is very loud and annoying and tends to be very volatile. Okay, not always the case, but often the case. So there are parts of this that at first I was like, well, there's some positives here. It looks to me like we're hanging out higher, but when we got to this point and we were looking at this last week really, and I'm talking about like Wednesday through Friday, so the last few days of the week, we're setting up in a way that makes me kind of uncomfortable because we've already sort of advanced. This is where you're going to be like, well, wait a minute. I thought we jumped over the creek. Didn't we jump over like the creek? Oh, we did one of them. It was this outermost guy right here on this advancement. But this particular action right here makes me feel like the purpose of this action was to move the price high in order to drop down and form as best as they could. I'm talking about short sellers, to form a very simple S-curve. And that S-curve would basically get you right down through none other than the 494, and some of you are just going to say 5, right? So that we can drive the price low. And what this accomplishes is a number of things. So number one is you're no longer testing the upper creek, which is important. Number two is you're probably going to go back and retest this jump that we really didn't test. There was no actual touch on it. So that's almost a guarantee at this point that if you're going to go, you're going to try to get to it, right? Almost a guarantee. There's never anything that's like perfect in the market. And all that's really required here in order for us to make an advancement would be to just make a higher high, re-advance back through both creeks, right? Find support here, jump this guy, and then continue. That's one option, okay? The only other way I can see forward, you guys are like, what about 430? No, forget 430. I don't want it. Like, maybe it happens, but I really don't want to go there. Because in order for us to get to 430, we either have to chop down all week to get there by Friday, or we're going to break this creek again, and I just can't see it. And I really don't want us to get there by making a false advancement early and then dropping down, because that's probably just distribution. And again, we're probably not going to stop at the gap at that point. I'm just going to say it. That's what I think. That's what I think is most likely based on the technical setup. Again, You don't have to believe it all right this second. I'm going to show you the macro creeks in a minute, and you're going to see what I'm talking about, because we are like on top of them right now. We are really, really pushing it. There are several that we are pushing against, and there is a massive wall, a really, really important one, like right above us. We're kind of in the middle of it, but it's like right here. And this is like a historic creek. And so it would be an ideal place to stage a distribution. If you're just trying to get the prices back down, it would be a very difficult place to buy through. And once you do get through it, you might get a big push, pretty significant push, I would say. But you'll see what I mean. There's like 2 or 3 that are intersecting in this area, and they're really big and really important. And unfortunately, what we're seeing is that pretty much everything that's been happening along those creeks, and I'm going to do my best to kind of show you without showing you, but pretty much everything that's been happening along those macro creeks has thus far been distributive. Like all of these 3 tops, 1, 2, 3, maybe even 4, have all been like attempts to try to get through and find support in this creek, this kind of giant, massive zone. And I'll get to that. But we're not finding any success. Okay, so this is option number 1 for success. Option number 2, and you guys are like, well, wait, couldn't it be longer in the middle? Does it have to be that? Yeah, it could be a lot longer. Technically, at this point, you could just go sideways. I know you guys are like, well, this is dumb. Now you're just making up anything you want. No. I'm giving you like a build out, because this could technically expand, and you could have it go sideways, and it could be a whole nother week before it really breaks out. And that doesn't really help you, but the premise of it is that you have 2 markers here, and they both have to be leapt. At some point, you have to leave both of them. So whether it takes 1 week or 2 weeks, it really doesn't matter. I think the 21st is going to be really significant, and there's another reason for that. And it's not just because of the Roaring Kitty stuff. I think he knew what he was doing. I don't know how exactly he knew this, but I don't know. He knew it. And I'll show you what I mean again. I'm not going to just leave it ambiguous, okay? So all of this stuff is optional, okay, which is breaking low on a waveform, finding support, pushing back up, and then continuing. So we've been talking about these waveform ideas quite a bit, and the biggest waveform would be this one right here at the moment. And you can see it would be very easy to see how that could be positioned to come back down, right, and check kind of this like more major creek, which is really low. But ultimately, like if you want to see a continuation, you would at some point need to see this creek return back and assume an uptrend. Okay, it doesn't work. The wave doesn't work unless it assumes one of the uptrends. So the way I'm positioning it right now, you might say, well, which one is that? It's right here. I mean, it's pretty straightforward. So this is like I'm pushing away from, and then I'm going to resume. This is basically what happened in March, in the March run-up, like March 22nd, 2022, where it pushed away and it went down low, and then it caught back up, right, and it intersected. The other way, which is frankly like hyper bullish, and I don't know if we're going to get this, is you don't actually go down in these crosses. Instead, what you do is you find like an early kind of support. You don't exceed the top just yet. You don't want to see something like that where it's like a UTAD and then you end up just breaking down, okay? But basically what happens here is that you're going to go through, and I don't even know how it could happen. This is so small. Maybe like on Monday, it could kind of go through it a little bit and then find support. Again, I don't know. It's so like hyper bullish. I don't even quite get it. And then come back down. It's like, how would this happen? It'd be a magical thing, I guess. And you found support somehow magically. Again, on Friday, you land above this, and then you just like take off, okay? And what that would be, for those wondering, is essentially like you're jumping this other creek. The one that was established by the 3 tops, one on Friday the 6th, or excuse me, one on Thursday the 6th, one on Friday the 7th, and then the other way over here on the 14th. So that build out, what it does is it continues to advance over the major creeks. It breaks probably the most important one here, but then as it advances this one, it goes and retreats, and then you basically find like a double bottom. Could be a higher low, yeah, but double bottom is fine. Again at 498, all right? almost everything else ends in distribution. So unfortunately, there's just not a lot of paths forward here. And you might say, dude, this thing could go sideways forever. Nobody knows. No, it can't. Because if it goes sideways forever, it's going to be jumping over some of the biggest creeks that AMC has, period. Like, it has ridiculous amount of intersections that are right here. And some of them are specifically leading up to June, okay? So you might be saying, like, all right, that's all good. You gave me the down low. How about the bigger picture? In the bigger picture, again, we're going to go through it. I don't want to make it seem like a trust me bro thing, but that's the basics for this upcoming week. All right, you've got essentially 1 or 2 trend lines that you can watch, and that's it. And I really think 498 is not 498. Excuse me, 494 is like the magic number. Okay, we want to be on top of that with support, ideally. And if we don't get that and we're underneath it and we're forming distributive actions, talking about like up thrusts that go back through it, that's bad. Okay? We don't want to be in that situation. All right. So let's get into the nitty gritty, because now comes the normal Booksy part. What about GME, Booksy? What about all the other stuff people talking about, the tailwinds and everything? I can't answer the question about I can't answer the question about tailwinds, okay? Because I'm not a great expert on those things. OPEC's coming up. You guys know about that. The T34 day is Monday, okay? I can't answer all those questions, so I'm not going to try to answer all those questions. Also, I don't think it's my job to do everything. I think it's okay if I just focus on like 1 or 2 things. And I've focused on a lot this weekend, maybe too much. And so at this point, I want to just kind of stick with what I know. And then what I don't know, I don't know. You know, there's going to be people that are like, well, you know, you don't know. It could go whichever way. Well, you're right. I mean, you're absolutely right. If we were to break down here, and you can kind of tell, this sort of shares the same trend. It could be a situation like this. My biggest concern right now is that we're setting up right on top of that. And we did that in the distribution. We didn't do it in the accumulation. We set up a lot higher, okay? It doesn't mean it's the end all be all. It's just one of those things. So where did this come from? Where does this analysis that you're doing here? This doesn't look like real TA, you know, I don't know what that is. Well, all right, let me gunk up the screen again. Y'all are like, no, don't do it. Well, I got to do it, so sorry. Sorry, not sorry. This is what you guys come for, right? The spaghetti? Okay. So what I did is I actually went through and I measured every single one of these 3 down bottom, okay? Because they all seem like pretty similar. I didn't talk about this one because this one's a little different. There's a lot of reasons why. This is a much more classic distribution cycle, and this one happens along the previous bottom. So at this point, it's more like a gigantic hook. These two are a little different because these two set up the bottom that we're in currently. And I was looking at them and I was like, well, obviously the range that we took on in February sets up these important supports that we're messing with now, okay? And I noticed that all 3 of them have a really similar, I'll call it a vibe. They all have a really similar setup. They do, which is they come down and they break down in a particular way. I call it a shallow S-curve, but essentially it creates like this M cross, all right? Now, you're going to have some issues with seeing stuff on this screen, and I already told you, this is kind of the long part. I'm going to try my best to keep it brief, but why does this matter to me? Well, when I studied this like diagram way back at this point, this would have been in August. It was like late July, August, and I noticed that this diagram seemed kind of interesting because it appears all over the place. And there's like a nitty-gritty versions of it, and then there's like high detail versions of it, right? But it's basically this kind of bottom. And this is what I think we're doing on AMC. And sometimes this bottom, it's basically a Wyckoff structure, right? Sometimes this bottom comes low, and sometimes this bottom stays high, and this is a Wyckoff because there's like almost like an auto reaction, and then phase B, and then either a spring or whatever, and then you leave. But one of the things that's curious to me and that I've noticed is that this particular early bottom, when small, often just looks like a bounce. When you start looking at it, and I did a lot of this analysis when we were coming down after August, because I was like, wait a minute, I'm starting to see this now everywhere. I noticed that when it comes in, it sets up something kind of peculiar, which to me has to be a marker of institutional trading, but also I think it's just a natural way of exploring the range or building out a range, which is you basically start creating everything that you're going to need in the range in this kind of one, we'll call it an M, because I like the M cross, but you kind of create this one really particular motion, right? And it's this falling like M shape. And again, I'd done like a whole video on like falling diamonds and all this stuff, and I was like, there's really weird targets you can get from these things. And I'm working on the side of the screen here, but I want you to see it right here, okay? And what you find is that this sets up some really key levels as we progress forward. Two notably are really important. One is there's an ascending, almost always, right? There's an ascending channel. There's almost always a descending channel. Well, I guess I'll say 3. All right. And then there's like a midline. And the midline is nearly always in the middle of the structure, although it's not quite that black and white. And what I mean by that is that sometimes the midline structure isn't quite at like 50%. So you can't really say, oh, it's at 50% every time. Okay? It's not. Oddly, there's almost always the same action. And this even applies to the macro. And I'm going to blow your mind in a minute if you want to be patient and wait and get through this kind of early stuff, because this is what I was working through. And I'm trying to explain why I did this very quickly again. This midline ends up being really significant. And what's very interesting is this midline later on becomes the place that you either distribute from or that you buy up from. And you might say, well, this is just 2 examples. It can't be enough. You have to have more, right? Well, interestingly, I actually went back and I did this on like 3 or 4 different levels. And going all the way back to, I want to say like September or October 2022 through that big drop that we had. That's a whole range. And then there's another one on the giant macro picture. And it's nearly identical to this, the macro is. And it kind of hurts my brain. Or we go straight up tomorrow and none of this matters. Go Chiefs. Go Chiefs. You were the one that told me that, like, you were the one that came in here and said something like, you weren't mean about it, but you said basically like it didn't matter. And then I ended up calling the target like perfectly. I distinctly remember this, and I haven't seen you for like a week. So be gentle, because you're right. None of it may matter, but if you're invested in it, it probably matters to you. So anyways, I don't know, dude. Point is, when you look at this setup, okay, there's a particular way to read it so that you can have information for later in the range. Another thing that's kind of strange about this setup is that the motions almost always take place in the same order and in the same time. So when I look at it, I'm like concerned because what time frame do you see this on? Well, I'm about to go to like the big picture. Okay, so I'm going to start small here. We're going to go really large, and you're going to see this on the full picture. This thing appears on the Mac, like the Mac. It is the macro. Like this is the beginning of the stock to where we are now. I mean, it's there, all of it's there, including the midline and everything. It's all there, 100% of it. Like it doesn't miss a beat. And the same applies here, except of course we didn't break down here. Okay. Anywhere you find this, and what this is, and this is the weird thing, is that I think when I look at it, I don't see it immediately. Like I don't see this diagram right here. But the more I kind of like stare at it, the more I'm like, well, it's actually all there because you have a distributive action up top. And then you get the sell-off. You actually get the midline sell-off. And what's interesting is, of course, where does that take place? Well, it takes place across that line that I'm trying to get my point across is it's this midline, right? And this midline is established every time when the stock comes down, including on the biggest time frame we have. And I'll get to that. This is the same diagram. And it's strange because even in this, you're kind of like, well, sure, like you see cat ears everywhere, Booksy, and they're right there. And that's where things get kind of strange because the more, I kind of look at it, the more I'm like, yeah, but that's usually the way it goes because this part, if you were to draw this in detail, is almost always like a full like cat ear sequence, like almost always, right? Like where are we going here? Why are we breaking down where we are? And I'm asking questions that, it's not like I haven't asked these questions before, but I'm asking questions about how does this relate to wave analysis? What's going on with supply and demand? What's going on with the buying and the selling on the stock so that it moves in a particular way? Why does it look slightly different every time? Even though I can see that it's doing the same thing, it's not in the same place. Well, it is in the same place, but it all has to do with how it sets up. And when you go back and you look over here, you might say again, like, well, it's not the same, but it is. Like, the setup always does the same thing, which is when we first come down, we basically have what I would call a buying or a selling climax. And then after the selling climax, we have a push back to the upside, right? And this is usually what we would call an auto reaction. However, for some reason on AMC, the auto reactions are very rarely actually, or I should say the selling climax is almost never like the bottom, which is kind of different. If you go to like Wyckoff schematics, usually you see a selling climax comes and then the auto reaction happens and then you build out the range. You never make a lower low again, not in the same way unless it's a spring, right? But that's not true on AMC. I don't know exactly why. Maybe it's because it's run by short operators. Maybe it's just the way that they decide to trade it for liquidity purposes. Maybe they find it, they make a lot of money on it. Whoever has the master algorithm on this, I'm sure it's repeated elsewhere, but on AMC it has particular volatility when it comes to this selling climax and then the secondary selling climax. There's like two selling climaxes. And what's bizarre is during that period that I call like a shallow S-curve, that M cross happens, there's almost always, almost without fail, there's some kind of chopping action that stops again. It's kind of like an attempt perhaps to allow the buyers to kind of buy back in. And it looks like they're trying to stop the advancement of sellers, but they're never successful. And then you get a new selling climax that's never as intense as the first one in terms of volume, but it still goes lower, okay? And there's always a particular place in that where the stock almost, it's just eerily similar every time, but there's almost always like a gap as well. It's not there every time, but it's there a lot. Like enough that I noticed it and I was like, well, that's weird. There's almost always a gap, right? So instead of allowing kind of the natural course to take place during regular trading hours, what happens is that they allow people to think, hey, it could be a bear flag, but it's holding support. Nope. And then they gap it down and it's lost support without anybody trading it. It's trapped in a bunch of bulls. The rest of this is kind of self-explanatory, right? You end up with what I would call like a whip. This is very interesting too, because what you find is that the level that you flattened out on is essentially like a 50% level for that reactive move. So what it ends up doing is it's defining like the bottom and the top of the range, and it whipsaws right around that gap level. Again, almost without fail. Okay. Now you might be saying, well, okay, well, so how does, if this applies to the big picture, like where do we get to that? We want to get to that on the big picture. Unfortunately, our gap level on the big picture, and you're going to see it in just a second because I'm going to pop open the other screen. This is not our gap level. Our gap level on the big picture, and I'm on the weekly right now, is actually here. Okay, it's actually this this 671 level. Okay, and the reason I say unfortunately is because when you start looking at this again on the big picture, there's a couple other places it could be. What we've seen is that we could be partially done, and I'm going to get to this in just a second. Again, I don't want to like lead you on, but we could be partially done. This is that place, remember, where we said they let you buy in and you think that it could possibly still hold the support, and then it just starts dumping, right? And you end up with like a really strong secondary selling climax, like essentially at the end. A lot of volume in this, not quite exactly the same. But the reactive move, again, almost always comes back up to near the top of the S curve, which is good news. Ours did. Ours exceeded it. It went all the way up to like 1330. And it exceeded it, at least in extended trading hours, which is fine. It didn't go as high as I thought it might go. And it turns out that, the doubling value for it is basically that $20 level, which is the level that we were looking at. It's like 1887 or something like that, roughly. I'm just kind of picking the pieces here. So we didn't quite get there. And you might say, well, then shouldn't we get another move? Well, the answer is maybe, because there's other things that happen here that are pretty important. One of them is that oftentimes that upthrust, that push up, and that 50-50 move as we see it, goes back and tests the previous bottom. So this is where things start getting kind of spicy, because I looked at it and I thought, well, it's one thing to, and I walked through it. I'm not going to take you through this whole thing. But I actually looked and went through piece by piece and looked at what was happening, what was being tested on every one of these levels across the board. How do you get from A to B to Z? You know what I mean? As you go. And it's fine. Like, you can do all that. I don't really think it's necessary, and I don't really want to do it, completely. But yeah, I looked at every one of these things and how they might interact, so that way I can have a better idea of what I'm looking for. Okay. And at the end of the day, it's like, well, I don't really want to present you with too much information that, again, you might find to be kind of irrelevant. And you might say, well, I don't really need to know all that. Just give me kind of the bare minimum. So I didn't keep those charts for a reason. So instead, what I did is I went through and I looked at this in a little bit of a different way. So I did use this diagram. I'm not going to keep them all on the screen all at once, is what I was trying to say. That's too much. So I wanted to see, like, all right, well, what was going on? I got the basic timing down. I was like, all right, there's a particular timing to all this. There seems to be a way to kind of understand. But what about these historic markers that I like to look for? And then, like, how do they interact, right? And I was about to say, another thing that happens here is that oftentimes this push ends up being a check on the previous bottom. And it makes sense, because if you position this in just the right place and then move away from it and then whip up, 50-50 around it, you're basically creating like a spring. So you have support here that's built on, for example, back here on just looking at this diagram on April 24th, you have support that's built on $3, $2.94 or whatever, okay, $2.96. You push away from it, X value. Then you go X value again, X value again. But the reason it's positioned here to begin with is because it's doing a 50-50 move away from the previous bottom. So it gives you an equal and opposite reaction that takes you back up to check the previous bottom. Pretty simple. It makes some sense, because if you think about it, it hasn't made that check yet. It's going to go back and make that check at some point. What doesn't necessarily make sense is how then, in a gamified market, you'd have to expect this. But then how would you determine that was supposed to be the middle? Why not down here? This could have gone like really, really far, right? And then come back up really, really far? Why did it stop where it stopped? And there's a whole lot of questions that I could ask about that, but I couldn't tell you every answer. All I could tell you is that the marker for the answer is present in that bearish flag and the gap. Like, it's giving you the signpost with the bearish gap and bearish flag and the breakdown. Those are the two places that you're likely going to see are going to be the 50-50 markers. Okay. So I had this question in my mind, like, well, it's fine. And again, it's fine to say that, but like, how do you apply that to the big picture? Because I don't want to make this just an academic exercise. So what I did is I went back and I looked at the weekly, and this is where things are going to get dicey, because in order to do this successfully, you don't have to take my word for it. You just have to look at it and you'll see what I'm talking about. But in order to kind of do this successfully, you kind of have to be like a visual thinker, and then you also have to be willing to look at it and see things for as they are. You can't like pretend that this isn't this or this isn't that. Like, it has to just be straightforward, simple. And yet at the same time, I think there's going to be people that look at it and they're like, I don't get it. I don't see it. So if that's you, totally cool. All right. But this is the original distribution. All right. And then you notice that this went to a new high afterwards. And then this is the bottom. All right. The first bottom. This is the first bottom. So I already had it in my brain. And you guys are like, this is getting weird. I already had in my brain that during this downward motion, something important happens, right? And then you get some kind of bounce, and then you're going to get this kind of cat ear thing and go down. This is the diagram I've been using for a while. What I didn't quite think about at any point in time, other than this being the distribution, was what is this garbledy-gook in the middle? Because to me, it just looks like, oh, it's just an LSPY, which is a last point of supply, which is basically confirming the distribution, where you're essentially pushing up and up and up back to the previous support, and you never break it. And it's typically on lower volume and yada, 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 and it distributes. But now that I've seen what I've seen, and I kind of looked at this, and I'm like, well, wait a second. Isn't that then the concept of the 50-50 line? Like, we just talked about it, because it happened, right? After the distribution is over, you come down, you mark off this kind of LSPY area, right? Which essentially is giving you a confirmation of the distribution right here. And then you break down, and there's usually a gap associated with it and a high volume sell-off associated with it. And you lose the previous range completely, right? The bounce in. And I start staring at it, and I'm like, well, let's just say hypothetically that's what it is. That's what this is. This is that midline right here on this giant falling M shape. Wouldn't I be able to see this a little more clearly at some point? And I go back and I look at the, I go back and I looked at this and I was like, holy crap, there it is. So like it's not even really that obvious because of the way this is shaped. It just looks like a breakdown on a range. I wouldn't imagine it being like some kind of M shape, in the future or in the past. I would have looked at this as the M shape, not this. Does that make sense? So like the first top, I'm like, that's the M shape. It jumped down. Not this guy necessarily, but of course it is, because we know that there's, of course, creeks there. And it makes total sense that that's where the creek is, because then we end up coming right back up in what I would call a 50-50 slingshot action, right back to the top. Just like we did here. We moved away from it and then whipped up double X. Yeah, but this was completely random, Booksy. Maybe it was. I don't know. But all I can tell you is that from where I'm standing, this is the same. Because it's the same dominant action, right? In the same breakdown, in the same order. And then you'd say, well, shoot, if that's the same, what else is the same? Because you can see an M cross here, and lo and behold, that's where we go. When we whip back up, we go right back to that trend. There it is. Right? It's right here. It's on the breakdown. It's always present, right? So I'm looking at this and I'm like, well, okay, that's fine, but I still want more answers because I want good news. I don't want this to just like terminate with kind of this bad news. That doesn't sound good, right? Nobody wants that. And so I'm looking at it thinking I could probably keep going, right? So I can find a way to understand the rest of this range. And as I'm looking at it, it's starting to click in my head like, well, if this is the distribution cycle that AMC has for generating massive bottoms, keyword is potential bottoms, but I should say potential is the key word, then this would be where we are. And I've talked about this silly diagram. I keep pointing back to it a lot because it's in almost every bottom we have. And it's also in almost every distributive action we have. It's no different. It's basically the same thing every time. I think it's the way, I already kind of talked about this a lot. I'm pretty sure it's the way that they're just trading it, right? And I don't think that this defines this, okay? I think it's the other way around. I think the macro defines the micro. So I think the fact that we did this on the micro isn't because they're trying to show you what the macro is going to do. That's important. That's really important. Because if you look at this as if it's going to show you what the macro is going to do, then you're going to be like, well, eventually we're going to rocket straight up to like 1,000. Okay, that's not really the way this works though. Because in every instance that you have one of these setups, there are other setups where you have double distribution down. Like the one right before this distributed and then it distributed again. You're going to end up with gigantic M shapes coming down. So let's say hypothetically this was that situation where you're going to have double M shapes. What would that look like? It would mean eventually, no matter what happens down here, if you were to have that double M shape, you could end up coming up for some kind of massive, awesome move and then end up coming way, 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 way down and doing essentially a recycled pattern. And it really doesn't even have to go that high. I would say it only has to really go up to there. And you could recycle the pattern again. And in theory, it could even be worse than that. It could actually recycle the pattern even lower and you continue down. So before you get all crazy and be like, well, dude, this ended with a massive move. This one's got to end with a massive move too. Micro interpretations do not define the macro. However, is this a waveform? Yes. Does this return back? Yes. Okay. And not only that, but there are some specific markers that can give you a really good indication of where you're going to be in the future. And I've used these before to do what I call a slingshot analysis, which is kind of how I got the 1330 to begin with. It really wasn't 1330. It was really like 14, but whatever, you know. It had to do with those waveform slingshots, okay? So here's what's most important, okay? I'm going to walk you through it really quick. For one, this area sets up much of the range, parallel supports, etc., similar to the diagram of July 26, 2022. That's this little bottom that we had right before the ape announcement. Okay, that bottom is just a really clear example of it. It's not the only example. There are many examples, okay? But it's one of them. All right. Major downward move after the pump. So this is kind of like an auto reaction. Comes back typically to early support and has a gap and sideways. So oftentimes it comes back to the first support. It does not always, but oftentimes it does. Usually it returns back there within a short amount of time, but it's not super important. This does, in both of these cases, return back to near the early support. It makes sense because it acted as a stop. So then it breaks down, right? And usually has a gap, not always. After which point we do that 50-50 move across that plateau that we made. We go all the way back up. This kind of tests, in some cases, the previous range. Oftentimes it's a 62% retracement, but not always. So I don't really think that's the best indication. Usually, though, it's establishing the next range top, or always it's establishing the next range top, and then you're ranging out. Now you're ranging out. Again, somehow relating to this previous area. It could be bearish, could be bullish, okay? The rest of this is where things get kind of interesting because in some cases you have what I would call a sign of weakness, and oftentimes you get that second top. You'll notice this is kind of like what we're seeing here with this push up and that second top. I'll get to that in a second, but it's kind of like that, okay? It's usually like a distributive top, and after doing a really deep retracement, you kind of come up and sell off again at the high. And sometimes, like in this case, you never come back. All right. But after that second top, you establish in any case, doesn't matter if it's bearish or bullish, you establish what I'm going to call the cat ear creek. The reason I'm calling that is because ultimately that's where the cat ears are forming. It's not this first move, right? It's in this secondary move right here. And this is where you see all the cat ear gobbledygook that we're used to when we talk about cat ears on AMC. Because the cat ears, what they are is essentially a distributive action. It's a topping action. Otherwise, it wouldn't be cat ears. It'd be like a W, right, on the bottom, which you do see sometimes as well. But they're there. They're even there on like bullish action. It's not like they're invisible just because the action is bullish. It just depends on what happens at the very end, right? We've talked through this quite a number of times. I'm not going to recap all that. It has a lot to do with the waves, whether it catches up or doesn't, whether it breaks down. And if you don't understand Wyckoff at that point, I'm kind of like beating on empty drums here. You know what I mean? Like there's nothing. I can't really like explain everything all at once. But they have to respect the range. So if the range ends up being bullish, you're going to get a spring or an LPS, then move on. The cat ears are still there though. Like they're still there. It doesn't matter if it's bearish or bullish. It just depends on kind of how it ends. Well, this is the major difference between the two, is that in the bearish outlook, what you see is that there is an inevitable cross down through that original support level. That level ends up being one of the most critical supports for the range, and it continues to be support in the future. Like we're finding right now that the 430 mark is still our support. It's one of the most important supports we have. Well, it was established as a support back here. And it's specifically because of this top, if you're looking at a wave, and this bottom. So if I were looking at this, it would be like this guy, right? And then this guy. And that's what established this particular center mark. Capiche? Okay. Unfortunately, this is the kind of the first place typically. I've got this a little low. Should be like slightly higher. This is the first place that you typically find after the breakdown. You get a cross down through the rising creek. This is the first place where supply is confirmed, and then you get a hooking action. And then actually might at first glance look really similar to what we see in this bottom. The difference is that this is what I would call like that quadruple flush. And what's happening is that you're getting a flush down, right? You're coming up, and then you're basically forming like a really rapid fire accumulation. You've got an auto reaction, a support, a phase B top, and then you drive the price low again, and you're trying to get to either a spring or an LPS. And this is what I've been calling, some might look at it and say it's like a W. I just call it like an M on the bottom, but I call it like a quad flush. I mean, it flushes like 1, 2, 3, 4 times. This is different than what we see in distribution. In the distribution cycle, it's kind of meandering. Again, it stays really low, and you get these rapid upthrusts, right, back through the range. It might even look like it's becoming bullish, especially at the end, because it crossed up. It actually crossed over the top. But it never finds support. Instead, it just has an upthrust, and then it gaps down overnight. They don't give you the chance. They pull the rug. Gobbledygook. That's right. So you see the difference between the two? I hope you do. One spends a lot more time higher, but also it's kind of low volume. And these have like these upthrusts that are spikes that go back up, and they're trying to like get back up through the support, and the support's above. This support is above too. It doesn't really test it very much. You know, it barely even tests it here. But essentially this is like a rapid fire accumulation. This is like a rapid fire distribution, and they look weird. This is the one that I like because it looks a lot like that March bottom. I like March. I like that as an examination point, but it appears elsewhere, and it appeared right here. Okay, as a good example. This is the one on May 8th. You know, again, part of the reason I was like buying in was because of the way this looked, but I saw that bottom and I was like, that looks really good. So when we go back and I look at this, I'm like, okay, so the cat ear is really important. I need to be able to find that on the macro. I need to find out if there's actually some important parallels. The truth is that they're kind of important and they're kind of not. The higher parallels are important, and that would be defined by the tops of this range. The lower parallels, you can see I've marked them off over here. They're not really that important. They actually don't even indicate where the bottom is. They're kind of respected, but the higher parallels are very respected. Like everything after that first push up, after this range starts forming, all of those parallels end up being respected in this kind of upper area here as we're going back through the range. So come back to the point, right, Booksy? You're again just kind of running off with it. I was surprised to find that everything that I was looking for was present. Like everything that I was looking for here is present on this kind of macro picture. Now I'm gonna position it in a way where you don't really see the end, because I want you to see like visually like what I'm seeing. I think you're gonna see it, and when you see it, you're like, oh, okay, I get it. All right. So what I'm gonna do again, I'm gonna try my best to kind of like space it correctly, so that you can kind of visually see everything that I'm seeing. Okay. So I was looking at this and I'm like, well, it doesn't look exactly the same, but there are definitely some similarities. And as I started marking things off, I thought, well, never mind. It's all pretty much exactly the same. So you get the 50-50 move. It did push 50% away from that midline. That midline, and you have to use like extended hours for some of this stuff, because you're like, well, that doesn't look like 50%. It looks like you just fudged the numbers. Yeah, I mean, there's a handful of parallels here that are kind of like questionable. You would probably say like, well, why didn't you just draw it like down here? Why did you draw it up there? It looks like that's the cross down, so you should have done it there, and da 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 da. All I can tell you is that you can pick a number of them, but they're all basically in that same little pocket, so it doesn't really matter. The reason I picked the one that I did is because of the bottom that we hit in March. Boy, you really like March. Yeah, well, so I picked it out and I thought it looked okay, and then I went back and I really studied it, and I was like, yeah, I think that's the one. So that one is at 69.92. So if I were going to pick like a midline, like much like we did in this structure, and I was to say this is a really important support, it would have been this 69.92. And when I go back and I look carefully, I'm like, yeah, I can see it. There's a pretty clear swing. And you're like, well, why did you pick that one? Because remember when this comes down, sorry, I should tell you why. Remember when this comes down, it bounces, and there's a secondary distributive action that happens? That's the March move. And then the sign of weakness, remember that? And it like pushes down through that support. That would be your move here into May, where it pushed down through that support. And then look, the secondary distribution's right there, right on time. Doesn't come as high, and it forms a creek. And then the rest of this gobbledygook, right, which is the shrinking iterations of the cat ears, is all designed to work you down into a place where eventually you hook on this level and you drop through supports. And that's where we went up to when we died off. And there's a secondary one here, and I've marked it off because this secondary one is your COVID drop. And I'm not trying to do a fractal analysis here that's so like obscure that nobody can follow it. But if you're following along with this idea that these setups algorithmically set up the rest of the range, which we kind of already knew. I mean, frankly, if you go back to the original master fractal that I had, it includes this early setup. And at the end, it goes back to the beginning. It comes up high and it drops down in the spring and it hits the original bottom right here. Like it's the exact same. I just didn't make the connection that it was this diagram. The same as the super same as the same diagram I'm using here, but it is. Okay. So I'm not thinking anything like brand spanking new here, but these levels are new to me because I'm like thinking to myself, well, everybody would have looked back and said the March level was pretty important. But the fact that we dropped here, I don't know. I kind of just figured like, well, that's just us dropping into the range. I think most people would agree. Like, it kind of just looks like we're just dropping into the range. It's not like that complicated. I mean, you lost support. You're completely right. But then when you kind of come back and you look and you think, well, was this something that's established in other areas on the stock? Are we seeing this as a trend? Like, yes, we are. It's right here. So that final spring action, when it accelerates the most, so like after you've done the M cross and you drop, that final spring action always has like this kind of hooking motion. And when you recover, when you come back later, this is the same place that you find after the sign of weakness and all the gobbledygook that we talked about. This is the same place you find that hooking action happens. It's also the place where you find that we've dropped this uptrend, right? So I'm not, you might say like right now, well, why aren't you using the specific example of, this guy? Because you could be using this guy, and this guy doesn't look like it comes down that low. Well, it doesn't, but it also doesn't bleed out. Like, it never comes down that low. It doesn't ever really advance beyond, it's like right here. Because it's bullish, it doesn't come back below this particular support. So there is a difference in the two because of the way it sets up. And unfortunately, in this particular case, I can't tell you. There might be other examples of this where it does come that low, but I can't tell you. It doesn't do it here. All right, and this is the only one that distributed. This part kind of hurts my brain a little bit. If you're still with me, the next part is kind of bizarre because it gapped down. I'm not going to go through all of this stuff. There is a cross here that confirms supply. It's this lower push down. Remember February, and it was approaching all these like funny creeks and stuff. That's basically like the same in terms of a fractal as what happened here in August. It's a secondary distribution action after another sign of weakness right here. We get the same exact thing. Like there's a second sign of weakness right here, and then you end up with like a big push up and a cross down to check supply levels and all this other stuff. Anyways, it just goes on and on and on. This part kind of freaked me out though. So when it dropped, I was like, well, you wouldn't expect it to be the same. LPS is an LPS, LSPY is an LSPY. Last points of supply could be anywhere. They don't have to be in the same spot every time. No, they don't. Oddly, this one does have two particular ones, 1, 2, and this one also has 1, 2. And then here's where we come to, if you were shown this from a distance and nobody told you that this was AMC on the macro and AMC on the micro, you probably think these two charts look very, very, very similar, maybe even the same, and they're not the exact same, but you'd probably say, look, man, they look pretty darn similar. With the curtain rod drop and everything and the S-curve down. So I'm looking at this like, all right, so at this point, what do you have? You have an early reaction up, right? After that initial reaction down, you have an early reaction up. This sort of defines, in some cases, testing of the previous range, though in this case is really low. And then you have this low gobbledygook crap, and then you drop off a cliff, and you go into another accumulation down bottom, or another distribution down bottom. You drop off a cliff again, so on and so forth. Now, I'm not going to sit here and say that I think that it's got to be 1-to-1, and I'm not going to sit here and map out every single move. Instead, what I'm going to do is just say, look, it's accomplishing the same goals. And if you're still with me, you're probably interested. It doesn't matter if it's a fractal pairing that's 1-to-1. I'm going to tell you that. It doesn't matter, okay? It does not have to be perfect. And I'm never going to sit here and walk through it and say, I think we're here, I think we're here, I think we're here. That's not what these are. Okay, these are markers for me to like look back and do comparisons. Everything is proportional and everything has to make sense. And here's where things get kind of weird. So I looked back and I said, okay, well, if I just glance at it, it makes me feel that there's no way we could be done with this move. Again, you could look at it and say, well, man, dude, if that's the same thing, then we're still like way down here, kind of where my arrow is pointing, right? We got to have another big move up to this range, correct? And you'd say like, again, I'm showing you like what I would do if I'm just looking at it saying like, well, look at just this. If I just look at that right side here, I would be like, man, we're going to come all the way back up. We're going to chop around here. and then we're going to make a big move, you know, we're going to come all the way back up to maybe the bottom here. So we're probably going to come all the way up to like $20. And I'd be like, yeah, that's kind of what it looks like. But here's the problem. And this is where I'm going to throw a whole lot of water on this fire, and you guys are going to be not happy. So I noticed that, again, one of the main reasons that you do this drop is to go do a retracement. And I'm not saying that's the only reason, but I'm thinking like if this is a spring-like action, right, then you're doing a retracement and you're going back to check the previous bottom. Well, cue the wah, 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 wah. You're also checking the cat ear creek, okay? So you're checking two things. You're doing a retracement, you're checking the cat ear creek, and you're checking the previous bottom. And this is where the want-wahs come in, because remember how we hit 1330? Guys are like, no, no, cue slow motion, no. Yes, I don't want to be the bearer of bad news, but it's bad news. So you might get you got the creek wrong, Booksy. It's higher, it's higher. No, I didn't. I'm not going to tell you that I'm perfect. I could have it wrong. So I know I just said that I didn't get it wrong, but I don't think I got it wrong. I was very, very objective when I went through this, and I looked very carefully at what was being accomplished and where these markers are met. These up thrusts, there's 1, 2, 3 of them. These are not part of that creek move that I'm using over here. So in terms of a one-to-one comparison, this particular creek, and if you want to draw it, you can go from the top in March 2022 to the top, not the first top, or excuse me, not the second top in February, but the first top in February. That's your creek. And when you look at it and you go back down to like the smaller nitty gritty, you're going to be like, ah, I see. Because the creek itself is very, very clean. And suddenly it's like, oh, okay. So when we were doing all this stuff earlier, we were really just doing like a whole bunch of tiny little up thrusts in the grand scheme of things, right? On this 4 hour, 2 hour, 4 hour daily, weekly chart. We're just doing a bunch of distributive action along the tops of these creek. So when I go back and I look, I'm like, yep, that's distribution in August. Oh, that just rejected straight off of it. That just rejected straight off of it. There's 2 peaks. There's actually another peak right when we drop back through it in August, right here, right, as a little hook. Oh, we distributed through it. Oh, that's where the shoulders are on the head and shoulders in February 2023. And then look at the beautiful little cross we have right here in July of 2023 across that creek. It's the only time we found support on it ever. We pushed off and we made that massive move and then created a distributive action, and then looky-doo. They did not waste any time. They dropped us all the way back down through that creek, and we distribute back up right above it and then drop again. So when I went back, I was like, oh, I see now. And I should have known, because the cat ears are like 2 distinct pieces, right? There's always like a first and a second, And I already knew that this was kind of that cat ear setup. You can kind of see it visually. It wasn't like that was unusual. I'm not. That was something we've talked about a lot. But I guess in the grand scheme of things, I wasn't 100% sure where that creek was. I always kind of drew it like, maybe I drew it kind of where it did now, but I was really looking at it being a little higher, because I thought where the gap started at like 43 was where that, like I thought that 43 level was an intersection of the creek, but it's not. So that's what I'm trying to say. Like it is, but way earlier, not over here. So when I looked at it in that regard, I thought, okay, so did this have a retracement that checked the cat ear creek and checked the previous top? Yes. Or excuse me, the previous bottom. Yes, it did. So at first glance, when I look at something like this, I'm like, well, it can't possibly be done, can it? And then I'm thinking to myself, there has to be something I'm missing. It can't possibly be the whole move. Because what about all this other stuff that I've been looking at? There's all kinds of stuff here. There's got to be another move. Like, there's all kinds of other indications that there could be another move. And I've got data that backs it up. It can't be that this is the end all be all. Well, here's the thing. It didn't hit that in regular trading hours. So the odd part about this is that if you look at it from the point of view of extended trading hours, the 1330 is almost perfectly like at the creek. It just is. You can't make this crap up. I think if you're looking at this as like the exit move of the S curve, right? And this is another thing that we talk about quite often is like that trajectory target. Again, you want some freaky math, I've talked about this quite a bit, that usually the drop down right before the shallow S curve ends up being roughly the same, if not the same as the top, right? Just depends on how you measure it. And it's kind of tricky. I don't always get it right. But it's usually like the perfect distance there. That's better. So the distance between that and like roughly where the bottom is, you end up with like a really clean swing. Yeah. So that's another thing I'm looking at because I'm like, well, that doesn't seem the same because this seems way too big, right? Like it's huge. It's a massive move. There's no way, right, that's the same. It just can't possibly be the same. And I think that's probably the one thing here that like I have the least amount of confidence in right now because at first I was like, well, it's not the same. But then I noticed that when you do this measurement, remember we did this before? And I said, well, shouldn't it be up here at like 18 something? Yeah, 1887. Again, like that number comes up 2 different times with 2 different analysis here, okay? 1887, once again, is one of those levels where you're like, okay, I don't get it. Why didn't we go to 1887? And when we first came up, that's the same thing I thought. I thought there's no way. That was it. It didn't make the full move. If I'm just looking at it from the point of view of a retracement, though, and I'm only looking at it from that point of view, then at this point, you would say that we pretty much made a 50% retracement, which was 1150 of this move down. We did do a 50% retracement. We did not do a 618 retracement, which is 1661. Okay, so there's 2 things we're kind of missing there. It's not the exact same retracement. That doesn't really matter, though. It just doesn't. It's just a retracement number. We basically did a 50% retracement, which is a pretty big move. We checked the previous bottom, which is the same thing that we normally do. If this is going to be a bottom, it would have to go back and check the previous bottom, right? And we checked the cat ear creek. So I'm thinking to myself, well, it didn't do it in regular trading hours, so maybe we just go back up and we check it again, And the thing is, and this is kind of odd, is that this isn't the first time this has come to my attention that we might have to check it again. And if we did, and we were unable to breach the creek, we might even be in a situation where we're forming like this kind of hyper compressed tall cat ear where we form like a distributive action after the fact. That seems really strange. I know. But then the more I studied it, I was like, yeah, I don't know. Kind of makes sense, though, because in this case, there is a double top. And in fact, same as the previous one, there is a double top. Like, after making some kind of advancement back, you usually retreat, and then you make the double top. The level of retreat is the curious part. This is the part that I'm kind of stuck with. And I got to be honest, there's parts of me that are kind of wondering right now if we didn't already do it and make that. I know you're like, no, we didn't. We didn't make a second top. I know. It's a very visible second top on these particular diagrams. So I'm thinking to myself, like, there's no way we made a second top. It's not possible, right? Well, yeah. It doesn't seem very likely that we've made a second top. And naturally, you're not going to get any kind of answer from looking at a micro, but the problem with this, of course, is that the micro doesn't really give you the answer anyways. The micro is going to give you some kind of a reaccumulation in every one of these little trows. The little space between these 2 tops is always going to have an accumulation. Why? Because it's always an accumulation. Because you have to have that little micro accumulation to move back up. So it's a self-evident answer then that, yeah, if you're going to look at these two tops, you're going to find an accumulation in the middle. It's probably going to look like an M cross, much like we have, right? You're going to get a very, very similar answer. Like it's just going to look like something like that, like M shape 1, M shape 2, and then if it works out, you're going to head back up. So that doesn't really help us because you're like, well, that's stupid, Booksy, because then you're saying that like we just have to determine whether this is an accumulation or not. Exactly. Which is why I opened the video with the most common sense, straightforward part of it, which was, hey, here's how it needs to hold in order to be a breakout. All right. But the rest of it's still problematic because if this is indeed, and I think it might be, if this is indeed enough of a check, then I don't necessarily think this is still on the table. I don't think you need to go there. I'm not saying you can't go there. I'm just not sure you need to go there. All right. And 1887 isn't quite the 2077 that I was looking for anyways, right? 1887 doesn't really seem possible as the crow flies unless you leave like now, right? And if you left like now, I'm talking about like now, right? Like tomorrow. Like this is so tight in this wedge here and you just break out and just go. And that's the bullish scenario of like, okay, we're finding support and we're just going to like keep pushing. Super straightforward. Maybe we go down low one more time, test this bottom. Doesn't really matter because we'd be outside the creek and then we just take off. And this is why I opened with this, because if you saw this happen, it wouldn't matter to you necessarily about all the rest of this. This is like a double top though, much like what we're seeing here. And the rest of it could then play out in any particular way. Meaning if it did go up to that 1887, again, as we were saying, it would have to like kind of race there in like a week, which doesn't seem likely. But if it went up there, the rest of it could still play out in any particular way. It could be accumulation, it could be distribution. And then here's the unfortunate thing. In either case, it almost always comes all the way back down to whatever that support line might be. So then it becomes very important to identify where is that support line, Booksy? Where is the center of this structure? Do you think the center of this structure is, right up here? Because you have a line there at 671. That was the double value, right, for 1887. That's interesting, isn't it? Yes, it is. It's very interesting to me that mathematically that works. That somehow this value and where this kind of chop sets up ends up being like almost a perfect 50-50 move, right, around where that chop sets up. As if somebody knew magically at one point in time, and I'm looking over here at the left side of the screen at this little tiny chop area. It's as if somebody knew that they were going to set up a 50-50 swing around this move and establish a bottom that's equal parts away from where that chop happens and the top that they want to get. It's as if it's mathematically in sync with everything, including what we see with creeks. And the answer is yes, it is. So what does that mean, Booksy? What are you trying to say to me? Are you saying this is distribution? Because you started sounding like it was distribution early on, and now you're saying it still looks like it could go up. But you're saying it already kind of hit the creek, but then you're saying it kind of didn't. So what's the answer? The answer is that I don't really know. And I think that if I'm looking at this from the point of view of what's probable and what's possible, they're two very different things, right? I already told you what I thought about the range. I'm being dead serious when I say that when I look at this range, I can't see much except for something that looks like distribution. And then I look back at these other examples and I'm like, well, there's not really like a one size fits all. Most of the time in the early part of these ranges, you don't actually return very, very low. You just don't. Most of the time your advancement takes place, then you build out the range. And the range in this case would be humongous. The other problem that I'm having, and you're going to see it in just a second, is that there is a macro, and I mean big, There is a macro creek right above us. All right. Now, I've been looking at this like from one particular vantage point, and I was trying to say that, you know, this particular creek, this downward motion, may be a little bit, you know, vague. Like we might not have a full understanding, you know, of where that is. But remember how I said, like, when you go back and you look at this big picture and you just kind of observe, like, where is the top? This is a huge schematic. And if anyone tells you that for some reason they tell you that this doesn't matter because it was so far long ago, like, that's absolutely BS, okay? It totally matters. Institutions trade long term. Like, they're looking at the daily chart like people are studying the 1 minute chart in retail. Like, that they don't look at the 1 minute chart. They don't need to, okay? Plans within plans, right? When I go back and I look at this, I'm like, okay, well, so there's this big area, right? And this area kind of spans where these tops are on this cat ear. Remember this little breakdown we had? And then the previous top over here. So there's two markers that I'm using. And when I go back and I looked at what did we experience exactly when we came up in January? What we experienced was essentially like we came back and tested that macro creek. And then this push out in September could then be looked at as an early advancement. And the push up in June can be looked at as, oh yeah, that's actually like a check on the creek. And when you go back and then you observe this like choppy area coming down, you'll find that it's equally respected all the way down. It's establishing a downward motion through repetitive motion, like each of these pushing up, finding support on top of it, pushing up, you know, confirming that this is like a marker. And an institutional marker might be disguised like that. It makes perfect sense to me because you're looking at it like, oh, it's an aggregate kind of chopped down. It's just a channel to us, right? But to them, it's like you're literally pushing and checking an imaginary line, right? A creek line. And when I go to the future term, like where we are now, even that kind of freaks me out because then I look at this and I'm like, oh yeah, and look at this. This is right where we camped underneath in September. It's like right where we hit the top and again distributed above it in November. I thought we were just doing that on the bottom. Yep, we were just doing that on the bottom. Turns out that it was also mathematically the intersection of a huge creek that started in 2016. How did they get it there in time? Even the gap down value literally gaps down to like where the creek is. Like this gap in September, you know? And then when you look at where we dropped down after this gap in November, look where we hinged. We hinged right on that super macro creek. And then we broke down away from it. And then, uh-oh. What does that mean for present day, Booksy? Well, this isn't the only one, and I'm not going to draw every single one of them tonight. There's a few. There's one particular one one more particular one I might draw, but this is it right here. It's right there. Sacre bleu! It is where the second day was. Yes, correct. It's where the second day was. The second day of the big push. It builds support around it and then drops back down through it. And then look, lo and behold, where are we approaching right now? We're approaching that $6 level. The intersections are beautiful. They're perfect. What does it mean, Booksy? Well, it means we got our work cut out for us because you have probably the biggest creek of all time and we're sitting underneath it, which isn't where I want to be. And I got to be honest, if I'm just kind of like eyeballing it all, it doesn't look great because to me it's like, well, I don't know. Kind of looks like we just pushed back up so that we could just sell these higher prices approaching this creek and checking it. We're not making any advances on it. And if we jump 6, that's easy enough to say, yeah, we're running. Everyone will already say that anyways. But what if we came up and distributed above it, you know? Or what if we came up and distributed at $8? Well, it's the same effect because you've got this kind of padded area where we haven't advanced. We rejected back here. you know? And that's not always a good thing. You guys are like, no, it's not. There's another one, and this one's a little weird, and I'm gonna have to I'm gonna have to find it. I hate to say that, but there's another one that is really, really important, and it's right here. And it looks a little bizarre, I know. You probably can't even see it very well. I'll make it yellow and fat. And if you go back to like the original breakdown, which is where we started downward, the best way I could describe this is I think this is kind of like, you know, I talk about like waveforms and how waves wrap around like these kind of trajectories or creeks. I think this is like the prevailing trajectory. It was established way back up here in June of 2021. It's after we break down from that kind of macro trend, I would say the big gigantic hook, I mean almost, but like that big 50-50 move up to the upside. It defines a lot of the price action as you go forward. You start noticing that it's very, very well respected all throughout AMC's history. There's gaps up and down through it all throughout. It's never like the bottom level. It's not like it's never like given away really. Like there's only a couple times. Once was here in August where it really looks like July and August 2022. It really looks like it's super like important, right? But then if you go backwards and you start really observing like, oh yeah, there's a hit on it, and then it distributes up through it, and then it checks out below, and then that's where the distributive top is again, like the double distributive top. Oh, and then it holds support again, you know, it's like a supply level and blah, 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 blah. It just keeps going. And then specifically when we get to present day, this is one that, again, I know you might look at it and say, it doesn't really look like the right line. I think you're drawing it too high. It's not respected here. You're right. There are other ones, and you could just drop it low, and you could say, well, that looks like it got respected. And it probably does exist. But this is the one that I found that I think is also super important, and there's a lot of reasons for it. I'm not going to go through them all right now. On the day that we had the reverse split, we opened at that price. We opened right underneath it. And you'll notice that in present day, if it wasn't bad enough that we were dealing with this huge super macro creek, we're also dealing with that guy. And that constitutes a waveform cross. And unfortunately, and this is the part you're not going to like again, is if you look at that retracement and you look at that advancement that we made, again, we're kind of just bonking our head on it right now. And it's really easy to see how if you distribute from here, you got a snowball's chance in heck that you're going to just kind of rip back through it. Like, oh, it's so easy. You just come right back through. Don't worry. You know what I mean? No, I mean, it looks like a straight up cat ear distribution. Like, that's what it looks like. In fact, when I started looking at this on different time scales, I was kind of like blown away by how simple it kind of appeared. Because I'm like, well, really, you know, this whole thing is a gigantic M cross. We already kind of established that. But really, like, there's another one right here. And it wouldn't be that weird for us to expect to have, you know, I don't know, this kind of structure right here. Why does that look so familiar? Because that's the same structure that like we've been talking about all night. And it really wouldn't be that weird to see that structure right here. Like, it happens. It only real requirement here is it, you know, make a higher high. That would be more bullish. But even if it came down again, we've seen it. It's happened before. You know, we've made these kind of massive retracements. So even if we keep back down and gap filled, you could see it advance as long as it advances back over the creek. And all I can tell you is that what I'm seeing right now is the setup is currently pressing down, or it's currently setting up right beneath this guy. Like it's either going to go or going to drop like a rock. So the reason there's a little bit of urgency in my voice if you hear it is because we're kind of out of time. And then there's one more thing I'm going to show you, and then that's going to be it. This is the Roaring Kitty thing. I don't know exactly how this worked out. Maybe it's unrelated. You know what I mean? Maybe it is. So we're like pushing it. This isn't like where we were back here. That's what I'm trying to say. Like this is like a super, super important waveform cross, and it's a super, super important, like everything right here is just majorly important on the big picture. And these are just my ideas of like different things that could happen. We don't have to worry about that right now. But it's super critical. Like these are not small time creeks is what I'm trying to say. Like they're big creeks. So it's very important that we push above. And then I noticed something else that I didn't really know what to make of it at first, because I was like, well, I saw this shape before, and the shape itself doesn't really strike me as odd, but what struck me as odd was the timing of it. So when I look at this on the big picture, and I'll just clear all the chart right now. Hang on, so you can just see it. I don't know where those vertical lines are. Oh, they disappeared. Of course they did. Why is that here? Why is that in this group? I should not be in this group. Let me move it out for just a second. Let me see if that fixes the problem. I need those lines, so I can't get rid of them. There we go. What struck me as odd was the timing of it. So I've seen this shape before. You guys are probably familiar by now with this shape. It's the general kind of double M shape. And I was like, well, that's kind of interesting. It almost like a mirror. It almost looks like a mirror image of itself. And I thought that was very strange how like similar both sides were. I'm going to try to frame it better so you can see it. And what I'm doing is I'm showing you the RSI, and I thought this is kind of peculiar, again, just because of how it's almost like a mirror image. And the thing is when we went back and looked at, and we did this before, we went and looked at this region where we're in right now, and we looked at the previous one over here, and they're very similar. And a lot of people have sort of pointed out that, man, they look really the same. Especially when you're like doing this and you're up at like eagle eye view, it's like, whoa, it basically look the same. So they don't look good, right? It doesn't make you feel good because you're like, well, that looks like a complete and total like redux of what we experienced up here. But what's weird about this is that in the RSI, it's the same way too. And what's bizarre is the setup is so symmetrical that I had to like go check. I was like, I have to find out why is it so symmetrical, and there has to be some reason. Because I don't believe that these things just kind of happen to be perfectly symmetrical over this course of time. And it turns out that this is an exactly 1 year cycle. So I went and looked, and all I did at first was just identified the outer point. So I started with the most basic thing, right? Which was, let me look at these two peaks, right? One's on May 14th, the other's on in July. So I was like, well, they don't look like exactly a year apart, right? But that makes sense because you're kind of going backwards in time. And I'm observing it, and I'm like, well, it seems to me that there should be then a midpoint. And so I went through and I looked, and I found that the midpoint was like the 15th. And when I did the cross here, I was like, oh yeah, okay. So it's pretty much correct. There is a symmetrical build out here. It's almost like the entire drop with the shallow S-curve and the reactive move is essentially like a rebuild of what we experienced here on the downside, which makes sense because I've noticed, I just never really looked at it before, but I've always been talking about it. Like I was talking about it earlier, like these moves tend to be kind of, 1-to-1 in terms of like in and out movements. And I don't know exactly why, but they're very much like a wind up and unwinding, I think. I think what we're seeing right here, in a lot of what we're seeing right here, is we're basically seeing a covering. I know it's going to sound bizarre, but I think we're seeing a lot of the exit of the positions that were taken. You guys are like, well, no, duh. But I think it's a very specific strategic exiting of short positions from this previous downward motion. I know I'm betting this happens every single time on every single shallow S-curve, but the scale of it is making it so that it's not easy to read. I went forward in time because I thought, well, where is the drop? Because clearly, if this is symmetrical, you would expect some kind of a drop here. Because if it were continuing to go backwards and it's like a mirror, then it should drop. And I went back and I looked and I thought, no way. No way. It's not, it can't be, right? I was like, I went back and I looked at the, I know you guys are like, well, this is in reverse, so wouldn't it mean we go up? I don't know. I don't really know. Maybe. I know it's not set up quite the same, but it looks pretty similar. June 21st. June 21st, 2023. And I'm going to curse for a second, so you got little ones. Cover their ears. I shit you not. This is unbelievably succinct. And I thought, that seems unreasonable. Because Mr. RK seems to have some kind of, despite him saying that he has no concept of TA, or I don't know, he jokes about it. He obviously knows TA. And despite him talking about mostly just options chains and stuff, something occurred on June 21st, 1 year ago, that prompted this entire motion that is clearly a determinate motion. And you might say again, like, well, why would that be like, maybe it's not that significant. Maybe it's just happenstance, because I could pick any date. I could say, well, I think it's going to be, June 28th or something like the next week. And then you could go a week later and say, where's June 28th over here? But this is not an insignificant date. This is very, very close, if not the marker. And I kind of have deleted and moved some stuff around. This is that marker that we talked about, like in the setup. And no, I didn't really draw it out right here. I didn't do this one. I could have shown you the same thing though. You remember how you have that like central marker right here? Dun dun dun. Wait a minute. You think this is also? Yeah, it is. It is. I'm telling you, like, it's everywhere. Here's that initial drop-in value, and then you have the sideways action right there, and then the hook and the gap downs right there. It's the same thing. This is the flipping exact same diagram. This is the same diagram that we just looked at. It's exactly the same, and this is, again, why I was starting to think, like, well, crap, I need to do this on the macro, right? This whole region represents a return then back to, and it doesn't make a lot of sense because, this obviously didn't hit the same levels that we hit back here, but it represents a lot of things. Like the gap down right here represents after the breakdown. It's like, this is where you kind of lost it. This is where you confirmed you're not going to return. This is the supply drop. This is after the sign of weakness, which is right here, by the way. And I already went through this as a diagram earlier. This is where that hook is, and it ultimately shows itself as, oh yeah, that's supply now, and then guess what? We come back there and we distribute at the same spot later. The drop down ends up being the only kind of relief we get, and this is like this lower accumulation. And this is the bizarre thing, is that when I look backwards at it, I'm kind of like, well, maybe it's not really a drop then, right? Because like, look at the motion down here. This motion essentially means that you're already on the bottom. So if we're just looking at it as like a mirror, this really doesn't give me a whole lot that I can't already figure out on using other things. But the strange thing about June 21st is that it's exactly a year ago. It's exactly like the mirrored action here is almost 1-to-1. And if you can't see it, I can kind of like lighten up this box a little bit. You can see it a little bit better. You guys can do your own DD with it if you want and check it out. You'll see what I'm seeing, I think. It's just basically the same exact thing on both sides. And that would imply that, unfortunately, on RSI, that there's some kind of an imminent drop. But what's strange about it to me is that going forward, when you look at this whole motion, there's definitely room there for a drop, but again, it's kind of like, well, we're at the edge of the rope anyways. Like, we were already at this place where I just went through it all. Like, we're already at this place where there's just like a massive amount of pressure to go one way or the other. And specifically, a lot of those creeks, they intersect that June 21st, and that's the date that the Roaring Kitty guy, Keith Gill, got his options contracts for. Well, it's just an OPEX thing, so it's just the year-over-year OPEX thing. Yeah, it is. But there's nothing about this that seems like a coincidence to me. Like, the return, the very, very public June 21st, I don't know if he's right, but I know that if we don't move the right way by this point, then my expectation, again, on the whole, would be distribution. I think there's going to be a lot that we're going to have to kind of walk through this week. And I just think it's really bizarre. I guess that's all I could really say about it. And frankly, like, the other thing I'm kind of thinking is like, well, there's not really that much time. There's only like a week. If this RSI is going to drop all the way down to the lowest lows it can possibly get, where is it going to go? There's nowhere for it to go. You know, it'd have to be a full-on breakdown that just essentially drops off a cliff here. I mean, that's the only thing I can think of. Like, what would drive the RSI from, again, I'm on the 4-hour, but like you could look at a different time frame. But what would drive that from like being around 52 or whatever to all the way down, you know, low, like really low? Because that's the only kind of piece left here is this drive back down. And then what's bizarre to me is like, well, that's only a week. That's not a lot of time. So it'd have to be some massive drop. But then what's even weirder is like, well, but that doesn't really make sense of this as a reversal, does it? No. It kind of looks more like a repeat, not a reversal. Because in a reversal, shouldn't this be gapping up and like going back up to like some previous midline? And then advancing again? I don't know. So what you're saying, Booksy, is you don't know jack diddly squat. I'm saying that I think what's most likely here, if I'm going to be honest, and I'm just kind of thinking with my head, is that we probably get some kind of a drop. I know that like I showed you guys a bunch of scenarios earlier. We might get some kind of like a crazy drop. And I'm not thinking like it's going to stop really, really low. I think we might get a really big drop that's really scary. It's possible. It's just my thought. I don't know. If it doesn't happen and we make the jump and we just go, that's great. Because on the one hand, there's a precedence for that. It seems like we're meant to be at like 18, not here. And then 18 would be a top. I don't think it's going to keep going. I really don't. I think we're going to have a big sideways action because that creek has a lot of space. There's a lot of time left to explore if we want to. Okay? But I think that ultimately like 18 is a better top than where we hit. Even though, yeah, we technically already made the touches. Maybe that's the end of it. It's possible. Maybe we never make another top again. Maybe we go to 11 and then we chop down for 3 or 4 months. But if I'm just basing this on like RSI setup, my thought is that you would have some kind of a drop in the RSI, and that would require us to have some kind of like a free fall move, which is awful. I don't want that to happen, but it would have to be something pretty dramatic. And the only target I could find that made any sense to me was like roughly around 380, maybe even like 360, and then kind of from there basically just move all the way back up to 670 like rapid fire. So I had drawn this thing out and I was like, I don't really get it. I don't really get why we'd have to do something like that. It's a widening. So I was like, well, it kind of accomplishes your goals, because if your goal is I want to get to, I mean, look at it visually. If your goal is I want to get to the midline, which is the only thing I can really think Again, I know you guys are like, well, maybe that doesn't really matter. Well, there it is, you know. I don't know. Maybe we drop down, we hit like 380. It's like horrible, wailing, gnashing of teeth, and then it's just this bloody sell-off for like a couple days, and then it's essentially like a big gap up, and then a run up to 680, and then we finally do our SOS and go. I don't know. And what's frustrating to me is that like that kind of motion kind of makes sense for AMC. It looks dumb enough to actually happen. And this could be essentially how you get that run up into July 1st. And I don't know if at that point we're going to make it to 18 something. We definitely could make it to that 1660 level, which was another target. It is a widening, and I could talk more about that, but you guys are like, well, why don't it just break down? You're just like an S curve, and yeah, I mean, it's totally possible. I talked about that already, so it was like way early in the stream, but I talked about this potential, and I totally think this is a possibility because from like a general standpoint, if that I'm just trying to be realistic. If the 490 level were a 50% mark, like a lot of the folks that are already bearish have been talking about, then $2 seems very likely. It's not that complicated. It's not. I mean, you come back down, it's a perfect 50-50. You come back down to $2. There's plenty of people that already think this is going to happen. You don't need me to give you permission for it, right? And then you come back down and you check that creek, and that's the Cattier Creek. It's the same one we already talked about. Do I think that they've done enough to get us there? Yeah. I think this distribution is designed, if it's a distribution, is designed to give you the extra leg down. So I know that this is going to tick some people off because I already have presented myself as like cautiously optimistic. And I also know that there's a lot of people that are going to be annoyed because you're like, well, you've been talking about how you don't think that's going to happen. Like, that's not really what I said. I said I don't think that's what's going to happen because technically when this gapped up here, ran up high, it is doing something important. It's wrapping around a range that matters, and it could end bullishly. But what we saw the last couple days of this past week were not great bullish moves. Like, everything was happening in like clockwork. We were like hitting this target, then we were hitting this target, then we were hitting this target, and this target. Everything looked good until we got to that really until we got to that close on Friday, but I would say that it really started Thursday. We failed to advance and make a significant gain, and I was really thinking that 570 would be the hit. But it's more than that. It's also like a failure to advance the creek, and then it pins us against the very level that we need support on. That's not a good place to be. It's either going to go or it's going to dump. And unfortunately, like, you could either have a double bottom right there, right, where it jumps up and comes back down, or it could hook. I mean, it's sort of this compressed point. And then you look at this macro creek that we're underneath, and there's two of them. And then you look at how close we are to the one. It's like we're right on it, and we're underneath it. We haven't jumped it yet. And then you look at the big picture, and you're like, well, shoot, man. We may have already hit the top we needed to hit. We did the check. Do we really need to do anything else? Maybe we need to go back down and check. It's unfortunately kind of a grim picture because while this could have set up in a cumulative way, and I think it's possible, it still goes to the upside, it's positioning itself more like a distribution. Like somebody's ready to like rug pull, drop us down to like 450 and then come back up right underneath 498. You know what I mean? Friday max pain will be 5 or something, and then you're ready for a big rug pull the following Monday. And I know some of you are thinking, well, that's not possible because GME is set up to have this kind of massive push, right? Well, in a lot of ways, and I know I haven't really talked about GME very much tonight at all, and you might be thinking like, well, maybe it's completely different. I agree. I kind of think in a lot of ways GME is really different. It doesn't do the same things that AMC does, and it definitely doesn't have like the massive pullbacks that AMC often has. It just doesn't. This is not the MO, you know, to have giant cat ear structures on GME. Now they're there, but it's very evident in the patterns of the stocks that GME and AMC are not the same. They're just not. And frankly, like AMC might make that deep retracement, and it's very possible that it does that. GME may also make a deep retrace. It goes as low as friggin' $14. You know what I mean? If it came back down, and it's gonna be bad either way if it did come way back low. But the fact of the matter is that this setup is not. It's just not the same. Like AMC doesn't have, or GME doesn't have that big drop that AMC has. It just doesn't have it. And therefore, if all the analysis that I did tonight was about AMC, can I just translate that over? No, I can't. And I don't care what anyone says about, this is old school stuff. I don't care what anyone says about them being like bedfellows. They're not the same. Like, GME never made new lows after we hit the high. You know, if you had held through all this crap and you had managed to buy in at the bottom and hold through all this garbage, you'd still be up like an incredible amount. And Roaring Kitty is evident of that. So I don't think they're the same, and I don't think that the sell-off for AMC, if it happens, if AMC becomes hyper distributive and we get this nasty sell down and it goes really low, I don't think it means the same thing for GME. I don't necessarily think it means GME has to come all the way down. Even in this, saying this, I don't think it has to necessarily come all the way down to the creek. People have said 1750, 18. I'm on board with that. I think they're right. It's that area, you know. And it's not just because of the gap. People always point to gaps and stuff. It's because that's where the creek would be, you know, right through here. I think that's reasonable. Because again, AMC didn't do this. It didn't set up this way going from May, you know. So I'm not saying it's out of the question that we get another run. I'm not saying that I'm suddenly super bearish. What I am saying is that the setup implies that there could be a massive sell-off before another big move. And if the big move does happen, it needs to be pretty dang soon. And that regardless, you're going to get some kind of massive move. I don't think there's an option. Like, the only other thing I can think of is that we kind of break down slowly over time, but AMC's like on the edge. And if it pushes out a little more sideways, it only has about a week. And it would be beyond those creeks. So I think there's going to be a stronger chance that we get a big rug pull first. I don't want to be pessimistic. But that's just kind of the way it is. Like, I don't know. At least on AMC. On GME, I feel a little less pessimistic, but I think it's possible that it happens. You know? I've already kind of talked about GME's price targets, but I'm a big fan right now of the 144, and I think that, you know, at very least, I think you're going to get up to about 96 if you got another big push here. If it's like AMC where maybe it pops up and it doesn't go the whole distance, that could be a spot potentially. I know they're different stocks. I know that they have different outcomes potentially. I know that the players are changing. You got some people leaving the play, probably other people entering the play. I still think this looks very similar to a distribution in some ways with the sell down on GME. I felt like AMC was stronger in that way. But again, it's kind of like you're checking, right? And both of these are checks. Check high, check low. And now you're coming to a place where, yeah, like I could see this taking longer, but AMC doesn't have time. Like, it's already at the edge. So What does that mean? Does that mean GME is going to run, AMC is going to nosedive? I don't know. I wish I had the answer. I started the stream off with like the more basic stuff because I didn't want to like get to this point and tick people off and be like, well, great, you don't know, that's wonderful. But I wanted to give you like the bare bones, okay? And GME also has some bare bones, which is basically you don't want to come back down beneath like 25. Ideally, you don't come back below 25 on GME. You stay high here, you don't come back below 25, and you race. You're also at a similar spot with a creek, except this creek's really weird and kind of flat. It's almost like downward and pushing down and flat. It's like widening, but at an angle. It's basically there as well. It's a similar setup in terms of like timing. Like mostly what I'm saying is between now and Tuesday, we're not going to have anywhere else to go. So you're going to have to make a move. So it's going to be within the next, probably within the next 8 trading hours, to be honest. But maybe 16 trading hours. And I think after that, you're going to have direction. And then going into the 21st, who knows? Hard to say. And I don't want to be, again, like a downer on it, but they're just different, And unfortunately, like, I don't really like the way AMC looks, to be honest. I'm not saying we don't have a chance, but there's just something about this, where it's set up, how it's set up, that just doesn't make me feel good. Like, I really don't like that we're right on that trend, and it's right on that level. Like, it would take very little, and yes, it's also right on the 4-hour 180 moving average, you know what I mean? So it would take very little, I think, at this point. And I know you guys are like, no, you got to have a lot of... Nah, I don't think so. I think it wouldn't take much to confirm a breakdown here. And it feels like a pretty big ask to confirm a breakout. So thanks. Appreciate that, Law Park. I miss Lou. Well, I'm sure if he's out there, he misses you too. It's a lot, man. I just don't see any kind of small move. It is too much riding on this little pocket right here. It's not, I wouldn't say it's not fair, but it's just where we are. And when you're stuck on this kind of like big picture, it's got to be big. Like, it has to be, And I was saying, like, early in the stream, this is it. Like, we're kind of at this weird place right now where we're just sort of at this really critical jump. This jump matters for numbers of reasons. And I think the resulting action would give you a huge move, and the resulting rejection would get you a huge move. Like, it's pretty significant. So it seems like the 21st of June was, for whatever reason, maybe it's the finishing of this unwinding. Yeah. And I know somebody said, well, maybe it means they're the last positions are covered. I don't know. It just seems like that's when it started. When you look at the patterns and the whole mirroring action, it definitely started, I think, last June for this entire move. So yeah, I wish I could give you like the surefire answer. I think for myself, what I'm going to do is I'm going to try to position with just shares or leaps, and then just do what I did down here and just short-term puts. And that way, if it goes south, like, I can make some money. And I don't think that selling off here is necessarily bad. Like, I'm still not on board with this idea that we have to go like super low. I think if you came back and did a creek check, you'd probably be okay. Like, it could take a long time. We could chop down forever, but you'd probably be okay if it recovered back above 350. I mean, it's not that difficult to imagine it. And then you cross the creek lower. All those things we were pointing out earlier, you'd be jumping them lower. We'd have to look at them again. But it's very decent potential if it can do it. I'm kind of burned out anyways, so I talked for like 2 hours or 3 hours, whatever it was. I don't want this to go down. Obviously, I wanted it to go up. I wanted to see the big moves. I don't think it's set in stone, so we're not done yet. We'll have to wait out Monday, Tuesday. But I do think we're going to get an answer this week, and it's going to be a big move. I can't imagine it at this point, just sitting here doing nothing. I mean, you can have 1 week of like basically nothing, but it's still going to end with either support or resistance against, in my opinion, against 494. I think you're going to see it visually in the chart, even if it's like boring week. Do you, man? You guys got to do whatever you got to do. So I'm not all about hyper prediction. I know that there's people that think that because I've been predicting like price targets, but that's in a range. It's pretty easy to do waveforms in a range. And when you're about to make big swing moves, especially in this case, we've got pretty massive setups here. So there's not a move that seems very gentle to me, either way. So it's not as simple. And it's definitely not easy to call for massive drops or massive runs when the range itself hasn't really finished. It's like right there, but it's not quite done. So, anywho, cautiously optimistic. I still would like to see the run. It would matter to me if we ran. I would be very happy. But I'm just kind of waiting, This just seems really likely to me. Yeah, I don't know. It still seems really likely to me, but maybe we get both. Ugh. I don't want to think about it. Yep. Really both of these levels. This one could be it too. This weird little choppy area. I didn't really see that one. That could be it too. It's got a little gap as well. Closed at 610, huh? I like that number better than 673. $610? You mean that price that we hit? I don't think we hit that in regular trading hours though. We were chopping around it. It was a fib level. It's like 615. Anyways, that's the midline for this S curve over here. So I don't know exactly where it is. One of those two. It's 610 or 673. So what that kind of tells me is that the structure of this should be set up at or above there. We're setting up below it right now, but that's like, I don't think we've quite finished it yet. Does that make sense? So if I was being optimistic, I'd probably say that something about maybe the setting up between there and the macro creek for a time. But I'm not sure. It's on the other chart. 671. It's supposed to be 673. Whatever. Close enough. And the other one's 610. Yeah, those seem likely to me. That's the two candidates. So, like, if I were being really optimistic, I would say that that's a better place for us to set up, like, a range. Is kind of do this move wherever it goes. Maybe it only goes slightly higher, maybe it goes up to 18, and then come back down and then set up essentially like here. And then that's where you'd basically have like a bottoming. It could work. I wouldn't mind that. That'd be nice. I'd understand this. This would make sense to me. Almost more so than just to sell down. But even if we did sell down, I kind of expect even if we did that, we would still come back up like to here. I don't know why. That'd be weird, but I feel like it'd still happen. I don't know. Because there's no, I don't know. Maybe there is evidence of it, but I don't really see any evidence of us getting stuck below. I feel like we need to be above it. So yeah, I think if we went back, it would just be for liquidity, like a quick spring back down. Makes sense. And then we would chill out, figure out what we want to do up high. October. Yeah, November is like right here. Actually, that looks like the intersection. Okay. It's like November 1st. I don't know if that means anything. Elections. There. That's where we'll be at elections. We'll be at $6.71. $6 at election. That sounds reasonable, actually. I'd be like, okay. Whatever. See, this makes more sense to me. It's like this kind of move. And then waiting until that time to either drop or rise. I know that Nick P guy is like dead set on us going low, but I'm kind of for it because of the S curve and the what I just talked about all night. But I don't know, man. I feel like we might just hit 380 or something and bounce. See too many things. Yeah, it looks right there too. 395. Oh. Yeah, like it's $4, dude. Well, there was a place when we entered in. See that? What does that mean? There's no way I can find that though on like a micro level. I'll make a note of it. We'll have to do that tomorrow. Yeah, I know. Well, after S curve. No, that's not right. It's not. It's after. I'm curious about this. So this actually kind of makes sense to me though, because when you came down, if this is a build out that establishes levels of support, you would see this as like a retest of these levels. So like when you come back up, you'd want to test all the levels that were significant, right? So like one of them's here, this like 411. You got like, what about that one? It's super low. Yeah, I don't know. Maybe. But maybe later. All three of those I think will be decent places. See, we did though. We checked that one. That's weird. We didn't check this one. Yeah, I think that's like, if we got a spring action, like that's like what we would see. It's probably go down to like 4 and then just like nosedive. That's low, but then what? I don't know. It's too complicated. It's too complicated. Yeah, maybe we go back up to like 1028 or something instead of advancing. I don't know. I'm gonna have to check this one out because I'm kind of curious. I don't know how fast you could go. Yeah, maybe. This actually seems pretty reasonable to me. Yeah, thank you for everybody who said Happy Father's Day. Appreciate it. So, yeah, I looked at GME. It's the same situation. Like, you're kind of at a bottleneck right now. I think it just needs to stay above 24. And if it stays above 24, it's probably going to be fine, like healthy. There could be a move down low to maybe about 21, and that's about as low as I'd want to see it go. The reason is there's some trends moving up here. I don't really have them drawn out, but it's basically right here. This is just a creek, so if you want to think about it like that, just draw a line like on these bottoms. There's one right here and then one right here. So it's, if I were going to pick one, that would be the low. So it makes sense when you stare at it. You're like, yeah, there it is. So like, I don't really want it to go below 24. Some people are calling for low lows, but I just feel like that's too low. Like you want it to stay above your main uptrend if it can. So I would say 25. And then if it springs, it'll go below it, but it'll come right back up. And then looking above, I don't know. It's kind of a weird like compression here. So again, like I know I've got these crazy lines and stuff, but if I just had to pick like a couple, probably just pick like those. You know, they don't look, it doesn't seem that complex to me. I think that's your main creek. So There's probably a way to draw it with like a trend even, because it's so tight. Not worry about it. It's like that guy. So we could see it drop down to maybe like, if it went fast, maybe like 2350s. But after that point, I think it's kind of a breakdown. It makes sense too, if you look at these two tops. Like, it makes perfect sense to me that it would drop down to here in this little pocket. Because they established it. I mean, like, these aren't arbitrary hits, you know, they're always like important. So I think they did it on purpose. That's what I'm trying to say. By they, I mean like institutional trading algorithms, composite operators. This is an uptrend. You haven't checked it in a while. You set up a creek cross. You moved out away from this, and then you come back down because you're not making the advancements. And it changes if this did advance. I mean, you have a pretty significant change, but yeah, it is. It's late. Well, I don't know. I don't know what's going to happen tomorrow, but I'm just saying, like, from a wave standpoint, like, that looks right to me. I don't know. It just seems right. And then you basically could waste the whole week doing nothing. You could do this if you wanted. And stay at 25. Or, you know, balance out and try to break down or break out. Either way. Well, I don't know what Roaring Kitty's doing, but he seems to have some kind of a plan, I guess. I would say that based on this chart setup, it looks like nothing's going to happen this week. If I were going to venture a guess, I think we're going to, and I'm just saying, because I think there's going to be I think we're going to iterate again, basically. Like, I think we're going to see this come back up and pretty much do the exact same thing we just saw. And then it's going to go flat into the weekend, and it's going to be at $25, like on the dot. That's my guess. And if something else happens on GME, I'd be kind of surprised. AMC doesn't really have room for that, so any kind of a move down, I think it's going to be, unfortunately, I think it's in a bad spot, so it might be more elaborate, I suppose. And yeah, to be fair, like, this is the place where you could have a giant cross. I mean, you could have it come up. You do the same thing like higher, you know what I mean? And be more like bullish. Probably be like that. So you'd have a new support here. It's the same motion, it's just different place, you know what I mean? And this would be like that move to 34, which I kind of wanted to see last week. This I could see. This would be very bullish for us. And it could end bearishly, I guess. You guys are like, what? Well, like, because this could be a distributive top amongst above or 33. You just have to wait for it to finish. And if it was, I think it will be. I think it'll break down. But then I think you would probably see some kind of like a attempt to shake out. And I don't know from there. We'll see what happens tomorrow. I'd rather see this, but that's just because I want to see it move up. Yeah, if I had to pick one, I'd say that's probably the main, because this is all distribution above it, and it found a little support on it when it jumped, and then we've been kind of wicking up until here, and we finally like camped underneath it. So it's been like constant trying to push, push, fail, fail, and now so it's like got to do it or it's gonna drop. That's kind of like the main one. And then everything else is a little bit more secondary, but yep. Well, I'm not interested in pumping. I don't know about other people, but yeah, this is pretty much the way forward if we want bullish price action. It's this way. All right, you guys, I gotta head out. I will talk to you tomorrow. Thanks for tuning in. Hope you guys had a good one, and we'll talk to you later.